The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Oh, happy Monday, everybody. Welcome to Squawk Box Europe with Karen Cho, Juliana Tautelbaum, and myself, Steve Sedgwick. And these are your headlines. Europe and Ukraine setting their own ceasefire terms ahead of Trump-Putin talks, whilst the White House reportedly weighing inviting Ukraine's president to Friday's Alaska summit.
European markets poised to start the week on an upbeat note, with the Stoxx 600 coming off its best weekly gains in 3 months, as investors brush off any remaining tariff uncertainty.
And Nvidia and AMD reportedly agreed to give the U.S. government 15% of China chip sales in exchange for export licenses in a potentially unprecedented trade-off.
Morning, ladies. How are you?
Good morning.
Let me ask the key question out there. Thank you. What is the point of a blooming holiday? I mean, seriously, every single time I go away, I have a relaxing couple of weeks, or in this case, I took 21 days, and then Sunday night, I'm like this. I can't sleep. What is the point? You turn up knackered on Monday morning after a 3-week holiday. What is the point? I genuinely ask that question. No? Or is it just me? Am I the only one who gets black dog on a Sunday evening and can't think about anything other than going back to work?
You do look refreshed, though. So
I was going to say,
another layer.
Your energy levels tell a different story.
No, sorry. I had a full body tan yesterday just to make sure I look really good compared to you two.
That's what happens when you exfoliate. That all comes off again.
Seriously. But the other thing is, nothing's changed. I know you guys have been holding the fort. Well, you've been away in France as well, and there's some amazing stuff going on. But nothing's changed. The data, still inconclusive. We get a dreadful jobs report, and then we get an incredible GDP report. The consumer's still spending despite the concerns, and goodness knows next we'll be sacking the bosses of some of the big bureaus on the stats. Oh no, we've already done that. But I mean, what else? Data, inconclusive. I heard Sylvia talking earlier at the end of the show that precedes this one, Europe Early Edition, saying key data this week. Well, will the CPI and retail sales really give us conclusive data? I don't know. And the other thing is, markets still absolutely surging, blindly ignoring all the concerns out there.
I think you're right to point to the data, but I wonder whether there's another creeping story as an undercurrent, and as the overreach from the White House. We've seen it from the story that you mentioned around the sacking of the head of the Bureau of Labor Statistics. But there are other elements just creeping in. There's one big headline story today around taking a slice of 15% of revenue slice from China operations, from Nvidia, AMD. There's that overreach we saw last week at the back end of the week, that there was a critique of the Intel CEO and calls for his replacement. Again, not the remit of a president to call for the sacking of a private sector person, and of course the Fed appointments that we've seen in terms of the White House overreach. So I wonder whether that creeping story, that narrative about the big hand of government could have some impact.
But that story you just mentioned, the AMD, we'll get Arjun up to do this a little bit later on. The AMD Nvidia story. So what, we're giving a slice of the pie now to the government on China sales, on H20 chips and what have you, in order to get that deal through.
Yeah.
And yet you can guarantee that the market will look at, oh yeah, it's great for AMD, it's great for Intel. They won't look at the bit that says you're going to get less of the revenue than you thought you previously would have got from those China sales. Sorry, you were going to say something.
Well, I think
good morning.
That's certainly, good morning to you. I think that's a really interesting story, and we'll dive into it with Arjun. But I think in terms of what you missed, one, you've been out for the last 3 weeks. You picked a quiet time, by the way, earnings season.
Because I wasn't
Thank
here.
you very much. But throughout earnings season, the big takeaway for me was how strong the tech earnings were, how strong the mega cap earnings were, and how strong financials were. Outside of that, we actually saw downward revisions. Yeah. We saw growth negative for the consumer cyclical sectors, for materials, for energy. So yes, equities have continued powering higher. But the real story has been tech, and I think that's been fascinating, that the AI story, the AI-driven trade has just gone from strength to strength over the last month, and that's really what's been powering markets.
Yeah, it's a good point about the real strength we've seen in markets, in particular around technology. But this story this morning around this 15% revenue slice, I mean, isn't that what taxation was meant to be doing? That you earn your numbers, you earn them internationally, and then you pay a slice of that in the form of taxation. That was typically where the government stood at the crossroads of that profitability, not on the revenue side. So again, this morning we're looking at something very different that has consequences for corporates in the States.
And on the geopolitical front as well, you've got this unbelievably horrible situation going on in the Middle East, in Gaza at the moment, and you've got the Russia-Ukraine war as well, which still sees, well, I see little sign of this ending at the moment, but maybe others have got a view on this one as well, because the story is moving on quickly. US President Donald Trump will meet with his Russian counterpart Vladimir Putin in Alaska on Friday, with the leaders set to discuss ways towards ending the over 3-year war in Ukraine. Now, Trump suggested a potential peace deal between the nations could include the swapping of territories. Swapping. So what? As far as I understand, swapping means you give me a bit and I'll give you a bit. I don't think this means swapping from the Russian point of view, but I may be wrong. I'll ask Christopher Granville about this. It's a proposition which has strongly been rejected by the Ukrainian President Volodymyr Zelensky. Now, whilst preparations are underway for a bilateral meeting between Trump and Putin, sources have confirmed to NBC the White House is considering inviting Zelensky to Alaska. Should the Ukrainian leader make the trip, it is not clear whether he and Putin would meet face-to-face at any point, the sources said. European leaders have expressed their support for Ukraine ahead of Friday's meeting, stressing the path to peace cannot be decided without Kyiv. In a joint statement, leaders welcomed the meeting between Trump and Putin, but reiterated commitment to the principle that international borders must not be changed by force, a stance echoed by Ukraine's leader.
Our arguments are being heard. The risks are being taken into account. The path to peace for Ukraine must be determined together, and only together, with Ukraine. This is fundamental, and it is important that our joint approaches and shared vision work toward a genuine peace, a consolidated position, a ceasefire, an end to the occupation, an end to the war, and I thank everyone who is with us, who is with Ukraine.
The EU's top diplomat, Kaja Kallas, has called a snap meeting of the bloc's foreign ministers today to discuss the war in Ukraine. Kallas said the US has the power to force Russia to negotiate seriously, but stressed any deal must include Ukraine and Europe. Christopher Granville, of course, is managing director at TS Lombard and joins us now. Christopher, Putin must be absolutely loving this at the moment. He's got a meeting with the US president in Alaska, of all places, which is very interesting because that was a deal between the US and Russia many, many years ago, of course, as you know better than anyone. But the fact of the matter is he's given up nothing and has got one of the key meetings he wants.
It looks good for him, Steve. Thank you for inviting me to join the discussion. I would say that Putin is always skillful in using give and take. There is something here for Trump, something really important. True, Putin's got a big win, exactly as you said. And if I could just elaborate on the win side for Putin briefly, the situation has been that both the US and Europe have been saying first Russia must agree to a ceasefire and then some negotiations can happen. And Russia has rejected that. The negotiations on a deal must happen first, rather than a ceasefire and then some frozen conflict and then nothing is agreed, like we had for almost 7 years after the Minsk agreement in 2015. So Putin's won that one. He's got his summit with Trump. There's no agreement to a ceasefire up front, and substantive peace terms are supposed to be discussed, including, as you mentioned, Steve, territory swaps. But he's given Trump something. Remember that up to last Thursday, Friday, Trump had this big ultimatum on Russia, which was going to be crushing sanctions, secondary sanctions, punitive tariffs on countries buying Russian oil, like India and also China, in theory. And Putin has given, it seems to me, the impression that Trump's hard line has worked, that Putin has offered concessions on territorial swaps and so on. So you've got to give something to the other side, or at least make the other side believe they've got something. And that's why we've got to this summit. And that's already a sign of that skillful give and take, or the illusion of give and take, which President Putin has deployed successfully in many occasions in the past.
Christopher, it's Karen jumping in. The reality today, Russia holds but a fifth of Ukraine. The suggestion by the NATO Secretary Mark Rutte about some sort of World War II precedent, where Washington accepted that the Baltic states of Latvia, Lithuania, Estonia were de facto controlled by the Soviet Union. How would that apply today?
Well, Karen, I mean, I think it's a very interesting precedent. Just to elaborate again on what you referred to there, the Baltic states were incorporated into the Soviet Union at the end of the Second World War, although the United States did not recognize de jure that they were legally part of Soviet territory, only de facto. So that, of course, is quite a plausible outcome, that clearly Ukraine is going to be partitioned, and that, as you say, a fifth of the country's former territory will be occupied by Russia. And a settlement may not involve the United States and other countries, especially in the US alliance system, recognizing that as a matter of law, although the Russians will, of course, press for that, but accepting it as a matter of fact. But the Russians would even then insist on some legal instrument or treaty. And for example, this is purely hypothetical, but if the treaty said that the new dividing line between Russian-occupied Ukraine and the rest of Ukraine was recognized in law as something which should not be changed by force, then you kind of finesse it. You know, it's not de jure part of Russia, but the border is recognized as something that shouldn't be challenged by force. So I mean, that's the kind of compromise. It's been discussed, I mean, among experts for many months now, and let's see whether the leaders inch towards it in Alaska on Friday.
In terms of markets, we saw a markets rally on Friday, and it seemed driven in part by the idea that momentum is building, that we could see a resolution here, we could get a peace deal. What would a peace deal mean for Europe?
Well, I think it's a very interesting paradox, and thanks for raising that one, Juliana, that the great distaste, if I can put it in mild diplomatic terms, in Europe for the kind of deal that appears to be cooking contrasts, ironically, with great enthusiasm, even euphoria, in European markets, financial markets, about the prospect of a deal. That's not just speculation on my part. We've seen this before. And a few months ago, I mean, when Trump pivoted against Ukraine back in March, April, you may recall, there was a clear reaction in not only the obvious names like Ukrainian traded sovereign debt or the Ukrainian GDP warrants, but also European equities, especially banking stocks, especially in Central and Eastern Europe, banking stocks in Hungary, Poland, Czech Republic, but also broader European stocks. Now, in the great sea of financial markets, one cause or driver and its relative weight is impossible to isolate. But nevertheless, you mentioned positive tone in markets, especially European markets. These developments have got to be good while they last. It may all come off the rails, of course, and no one who would want to be appearing sensible in public would predict a happy outcome with any confidence. But markets will have to discount the possibility that this may lead to something. And if you ask my view, leaders like Trump and Putin don't meet with a view to not having anything to show for it. Something will probably come of this, definitely.
Chris, two of the key terms. I'm not worried about the NATO terms because I think that's a moot point anyway, as a lot of experts have told me for a very long time as well. But the getting rid of Zelensky and replacing him with a Yanukovych type character as well. And our viewers, if they don't know who that was, they need to look back to pre-2014. A Yanukovych type character and neutering the armed forces of the Ukraine as well. These are two key demands that the Russians want as well. I can't see how the Ukrainians would budge on that.
Well, I think exactly right, Steve. It's going to be super difficult. Let me take those in reverse order. The neutering of Ukrainian armed forces, that is a formally stated Russian war aim, which is the Russian word used is demilitarization. And I'd agree with you, Steve. I mean, I can't see how that can be agreed in the sense of Ukraine being left with skeletal armed forces, especially after the experience of being invaded in a terrible 3.5-year war so far. But again, as on that territorialist you were just discussing with Juliana, you can imagine some kind of compromise. For example, that there are legally enforceable arms control agreements whereby the Ukrainian armed forces do not have longer range missile capabilities, offensive. which of course would have to be supplied by either US, Britain or France. Instead, they have air defense missiles which shoot down incoming missiles. That kind of finesse, I think you could see. Moving to the first point, Steve, on Ukrainian leadership. Well, any deal would have to go to a referendum in Ukraine, ultimately to new elections. I mean, Russia is saying, and this strikes me personally as reasonable, if you sign a contract, you need to be sure that your counterparty has valid signatory powers. And Zelensky, his term has been extended as president, parliament at the same time. So in other words, it's not obviously Russia wants a friendly government in Ukraine. It doesn't want Ukrainian government which is used by the US as Russia sees it as a kind of battering ram against Russia. But there would have to be new elections because the Ukrainian voters would have to endorse whatever deal might be agreed. And then you have, by definition, a new authority in Kiev to finally sign off or at least ratify. The deal would probably be pre-signed or ratify the deal. So yeah, that's how I think that would play out. So you can see I'm just trying to trace ways between these rocks on those two matters. Previously we discussed a minute ago the territorial matter and so on. So there is a path, and to go back to the investment conclusion, markets will start discounting that unless something happens which just kiboshes the whole thing, which of course is all too plausible. But again, I think that there's huge interest now in bringing this to an end, including in Ukraine itself, where opinion polls show over 2/3 want the war to end. That is a reality which I think will ultimately impose itself on whoever is in power in Kiev.
That could be a key point, Christopher, the Ukrainian intentions themselves. Let me ask you about one quarter of the market in particular, namely defense stocks, because I haven't heard one voice yet suggesting that if there is a breakthrough, then we see pressure on those defense names. Many think this is just a long-term story still, regardless of what happens with Russia and Ukraine. Do you agree, or do you see short-term risk, some profit-taking if there is a glimpse of hope of a breakthrough?
Strongly agree. My call on European defense stocks since about 2023 has, when it became clear that the Russian military was extremely powerful and was not going to be rolled out of those territories in eastern and southern Ukraine, my call has been buy on any weakness, on any temporary pullback, because this is a win-win for European defense stocks. Either the peace process fails, goes off the rails, which, as just said, is always, sadly, more than perfectly possible, if not likely. In which case, the need for trying to replenish the depleted arms inventories of US and Europe, depleted by supplying Ukraine and also Israel, by the way, which is why there's no air defense assets left for Ukraine these days because of Israel's war with Iran back in June. That would be very good for orders and procurement for Rheinmetall and all the other European defense stocks. Or if there is a peace agreement, what do we see? We see a very powerful Russian military, which, although the words victory and defeat will be bandied around and should probably not be used, a Russian military which has to an extent prevailed. That reality will force continued increase in defense procurement by European governments, and is also good for European defense stocks. Either way, it's a winner. The market, of course, has been discounting this. So from time to time, those names pull back a bit. You should buy on that weakness, in my opinion.
Christopher, on the other hand, there is a view out there that if we do see a resolution here, a peace deal between Russia and Ukraine, that the urgency, the impetus for European leaders to continue prioritizing defense spend could dissipate, especially given how much pressure they're under to come up with the funding and what the cost of this funding, what they'll have to give up in order to prioritize defense spend. You don't seem worried, though? You don't believe that argument?
I wouldn't dismiss that argument for sure, and it will weigh on the other side of the scales. I think, however, that it will be outweighed by the points I was just making, which I'll just gloss quickly now. First, a kind of military Keynesianism. The German fiscal revolution back in February of this year, when the German parliament overcame decades of fixation on fiscal discipline, that happened because it was clear that the United States was no longer a reliable ally, and also because it's easier to express a fiscal expansion to promote domestic demand, which is what Germany needs to do economically, as defense spending, because spending more on other things is politically more difficult. But if it's national security, it's easier. You get that domestic demand generation, you get the investment and the employment that comes off that. So there's a very strong underlying Keynesian impulse here, which we've seen in real life in Germany already this year. It's not speculation. I agree for the other countries, especially countries like UK, France, Italy, fiscal headroom is non-existent. In fact, is negative. So much more difficult to find the resources unless you're going to just increase debt more. But again, the reality is that the US alliance is now fraying. The huge strategic interest in keeping the US on side. And therefore, and this doesn't just mean Trump,
Chris.
Ever since Obama and before, US administrations have been pushing Europe to spend more. If they don't spend more, then they might snap the last thread which keeps them tied to that US security umbrella. And therefore, the incentive is overpowering. So I think the scales weigh in favor of that increased defence procurement. However you look at it, it's got to be positive for the defence stocks.
Chris, the problem is you read history, I read history as a complete amateur, but one thing I do know, and I'll just pick the country you just mentioned there, talking about fiscal militarism or Keynesian militarism as well. 1870 led to 1871. 1913 led to 1914. So you've so far in the bag, what have we got? We've got Bismarck, Bethmann Hollweg. We've got the Third Reich in the late 30s as well. Every time there's been German military Keynesianism, it's led to a war in Europe.
Well, that's a very strong historical argument. I'm old enough to remember being a student studying history. I would have been better off studying physics, perhaps. But I remember A.J.P. Taylor delivering a lecture at Oxford University about that. So if you have an arms build-up, you don't get the balance of power, or if you do get it, it's only briefly, and eventually the parties will want to play with their toys and go back to war. That was his argument. I remember it very well in 1982. Well, it's a pretty strong argument, isn't it, historically based? But there are counter examples, especially the stability of the Cold War, when all the violence of the Cold War was fought in former European colonies, mainly in proxy wars between Soviet Russia and the United States and its respective allies and partners. But in the main battle theatre of Europe, the situation was stable, with forces that were kept strong on either side. And that has to be a more encouraging precedent. And ultimately, it's a choice between give and take, and the great power blocs seeing their overwhelming interest in peaceful coexistence. Sounds like peacenik 1960s, doesn't it? But that has to be the best hope, as opposed to a struggle for mastery, as the historian A.J.P. Taylor called it in a very famous book, which leads ultimately to conflagration. But unlike back then, in those examples you mentioned, Steve, Franco-Prussian War of 1870, now, of course, there are weapons of mass destruction. So that means the end of everything.
Christopher, thank you for the far-ranging conversation. Really appreciate you joining us this morning. Christopher Granville, Managing Director at TS Lombard. Coming up on the show, NVIDIA and AMD reportedly agree to share their Chinese revenue with the U.S. government. Plus, SoftBank's founder turns to AI as he looks to position his company at the center of a tech revolution. And we'll get a check on the crypto space with Sid Powell, CEO of Maple Finance. That conversation is coming up at 7:30 London time.
It's a busy week here in Europe, and here's what to look out for. Tomorrow we get the latest labour market figures out of the UK, which are expected to show average earnings ex bonuses up 5% on the year in June. Don't forget big concerns last week on the back of the BOE, the central bank decision about just what state of health we've got for the labour market. On Thursday we'll get second quarter GDP estimates out of the UK and the EU. Quarterly growth is expected to slow to 0.1% on both sides of the channel. By Thursday, we'll get numbers out of ThyssenKrupp in what has been a stellar year for European defence names. Share price performance. Now, 4 of the 5 best performing stocks on the Stock 600 have been in that basket year to date. And also on Thursday, we get a half-yearly trading update from Carlsberg as the earnings continue to roll on. Chinese CPI inflation came in flat on an annualized basis in July, while producer prices fell a greater than expected 3.6% amid continued deflation concerns in the world's second largest economy. The cost of US tariffs are expected to increasingly shift from US companies to consumers, according to research from Goldman Sachs. Analysts at the Wall Street lender say consumers have absorbed around 22% of tariff costs through to June. But if the levies follow the trend of previous tariffs, this will rise to 67% by October. Conversely, the report forecasts the share of tariffs absorbed by US companies falling to just 8%, down from 64% through to June. The result of that would be an expected annual core PCE inflation reading of 3.2% in December, assuming that inflation net of tariffs would be 2.4%. So a lot of detail there, the ins and outs of it. Basically, if the tariffs can be passed on to customers, then those big producers did so. If there wasn't as much competition, they passed it on, and the weight of consumers bearing the brunt, that is coming down the track.